Hello, Joe Neighbour here from Signal Centre. It's the 1st of July, and today I'll be running through some FX charts once again to give you an update on our view on where we think certain FX markets are heading, and hopefully give you guys a bit of direction and assistance with your charts. So first up, we've got a dollar index chart in front of you today. This is a daily chart, and in terms of the latest news with regards to what's moving the US dollar, yesterday we had the ADP employment number out, which is always seen as a precursor to Friday's non-farm payroll number, and that came in better than expected rate, and that helped to further lift an increasingly buoyant greenback, which we've seen in recent weeks. And for those that have been watching these videos over the last few weeks or so, you will have noted that I've been more and more bullish on the outlook on the dollar index, certainly from a perspective of thinking that a potential bottom has formed. And the reason behind that from a technical perspective is, as we can see on the chart, we've broken out of a range. So the upper end of that range, channel, the upper end of that channel is that blue line that you can see on the chart there. And what we saw here back on the 17th of June was an impulsive move to the upside, breaking through that channel, and since then we saw a little bit of a pullback to retest the reverse side of that channel, where we formed some support around about 91.43. We then saw some stabilization of the price, or a consolidation in the price, and in recent sessions we've seen a continuation higher. So in the last 3 sessions on a closing basis we've seen gains for the dollar index. If we can close above or in the green today on the dollar index, and that'll be 4 consecutive days of price rises for the dollar index. Now what's quite interesting today is that we're actually taking out this resistance level that we posted here. So the swing highs that we posted on the 18th of June, that's being taken out. We had a little bit of a go at it yesterday, but couldn't quite close above it. Looking at the price action already today, dollar index is on the front foot again, up by around about 0.2% and clearing that resistance at 92.40. So looking really strong. In terms of data today, we've got initial jobless claims due at 1:30, and then at 3 p.m. we have the US ISM manufacturing PMI, which is always a well-watched number as it's a bit of a leading indicator on what we can expect going forward from the US economy. But we also have the non-farm payrolls tomorrow. So typically ahead of non-farm payrolls, you may get a little bit of positioning or a little bit of not really much price action because people are waiting to see what this number is going to bring tomorrow. But where we're going now in terms of the dollar index, while above this resistance at 92.40, we can start targeting this resistance I've got on the screen at 93.02. Now why I've got that resistance there, if we cast our eye over to the left hand side here, between the 5th and the 6th of April we actually created a gap on the chart. So on the 5th of April we closed up at 93.02, but on the following session we actually opened quite considerably lower at 92.57. So there's a big gap there that hasn't yet been filled. So that will be my next target on the upside. And then if we can overcome that resistance level, then we've got this key level here, which is from the high posted on the 31st of March at 93.43. Now, for me, this is a really big level, and I'll show you why. If we flip over to a longer term chart, from a weekly perspective on the dollar index, then you can see that big blue line at 93.43. Now, if we break above that level, for me, we've completed a double bottom pattern on the dollar index, and we can start targeting higher levels over the medium term. It's only a potential double bottom at this stage. We need to clear that resistance before we can actually call it a double bottom. But quite interesting, because if we take a measurement from the low that we posted on the 4th of January to that high that we posted on the 29th of March, and we project that higher, this is often the way we get an indication of where price could go by using double bottom patterns. Then we're looking for a target of 97.66 over the medium term. And why that's also interesting, because if we take the high from the 23rd of March last year to that low again on the 4th of January that we saw this year, and do a Fibonacci table, then what we get at the 61.8% level is a 97.72 reading. So within 5-6 ticks, we've got 2 targets here to potentially look for on the dollar index. So nice bit of confluence to target, in my opinion. So I'm of the opinion that we could see higher prices in the dollar index, particularly if this high at 93.43 is taken out, and that will of course have a knock-on impact on other currencies that are linked to the US dollar over the short term. Just a very quick look at euro dollar. This has been really weak, as you would expect, given the strength that we've seen in the dollar index. And what I'm seeing here potentially on the daily chart is the formation of a head and shoulders top pattern. Hasn't completed it yet. For me, it needs to break this blue line here, which is the neckline of this proposed head and shoulders top pattern. If this is taken out, then we can start thinking about lower prices over the medium term. For even more confirmation, I'd really like to see this red line of support taken out at 117.04, which was this swing low posted on the 31st of March. I prefer to see breaks of horizontal lines rather than uptrending or downtrending. So if we take out those levels, then I'd be looking for lower prices down to 110.56 on euro dollar over the medium term. So potentially some big moves and shifts in trend about to occur in anything linked to the US dollar. So be mindful of that. These patterns do look like they're becoming very close to playing out. Maybe non-farm payroll tomorrow could be the catalyst to see us on our way to completing these setups. So hopefully that's given you a bit of a cue on where things could potentially head on anything dollar related. I'll be back next week to see if there's been any further movement on those, but that just gives you a bit of an idea of what we're thinking and how we are positioning ourselves here at Signal Centre. Until then, trade safe everybody. Good luck tomorrow with non-farm payrolls as well, and I'll be back next week. Take care.